presentation will last about 20 to 25 minutes, and then we'll open up the charts and start looking into specific examples and go over everything in detail. And then we probably will start to cover other advanced topics about settings, putting charts on and things like that. So you just hang on and we'll get right to that. Okay? Are there any questions before we get started? Just want to remind everyone that there is substantial risk in trading futures, stocks, and currencies, that trading is not for everyone, that all the information that we present here is for educational purposes only and should not be construed as trading advice. Basic concepts of support and resistance, or zone theory, is that price will migrate between different levels within the market. There is a region of price where it is attractive to buyers, and so they place a demand on that product. As a result, price will go up. Okay, it'll go up until it comes to a point to where it's no longer attractive. Buyers vacate the market. The sellers are in an abundance, and a lot of product is in the market, and so if there's no buyers, the price has to go down in order until it finds a place where it's attractive again. So just by very nature of that cyclical that cycle that occurs in price, we see supply and demand zones being produced, and it's very, very evident in fluid markets. Whenever the market is going from a demand to a supply zone, we do see a structure or a trend in place. Whenever it locates them, we see price moving sideways. Whenever there is a breakthrough in one of these and price is continuing to go as a demand is continuing to be placed on that, then we see a flip-flop nature occurs. That price, once it comes up, will come right back down and settle into that and treat it as if it were a demand zone. Here's just a very quick example, price action, where we can see areas of consolidation, where we can see regions that have been tested and prices going sideways. Then we start seeing areas where we see a trend. A downtrend is demonstrated by a series of lower highs and a series of lower lows. Likewise, you can see an uptrend is shown by a series of higher lows and a series of higher highs. Okay, so price will come up to these areas for one reason or another, but where are the supply and demand zones at? Where are support and resistance? It's not as evident as the actual trend of the price action shows, but what we've tried to do here at AppZones is giving you a software tool that with a single click of a button will enable you to see, okay, with very real clarity where the supply and demand zones are. And it gives you an advantage in the market. It gives you the ability to see ahead of time price coming up into a zone that has sometimes been there for days, weeks, months, or in this case even years. And so when price gets to these levels, why does it behave as it does? Why does it reverse or retrace? And knowing that it's there, would that change the way that you make your trades? And that's the idea behind the zones, is that we want to be able to give you that heads up, that type of an advantage. Okay? So anytime the market is open, we need to keep track of these zones. We need to know when they're.
Welcome to GoToWebinar, Web Events Made Easy.
For you so that you can easily see it and respond to it. Okay? So a lot of it, the way that you use these zones depends on what type of trader that you are. So we've adapted the zones to match all types of traders. Whether you're a position trader, you're looking at yearly, monthly, weekly charts. If you're a swing trader, where you're looking at a weekly, daily, or hourly charts, or if you're an intraday scalper, where you're looking at daily, hourly, minute, tick, range bar charts. And so we want to try to make a software tool that was flexible and adaptable to meet the rigors of daily trading. So getting into specifics of trading, we're looking at money. Okay, that's the reason that you're there. That's the reason you're trying to trade in the market, is to try to extract or take as much money as possible without having to give it as much of it back. So the zones will help you to do that. So we've identified as a concept very unique to AppZones, and that's the idea of bounce counts. And bounce counts are the number of times that price interacts with the zone. Okay, so the idea behind a bounce count is that when price comes up to a zone and interacts with it, it touches it, it comes into it, then we identify that. And we keep track of all those interactions, and we refer to that as counts. And we've been able to see through that counting that we can identify that the very first bounce is usually the highest probability of a reversal. That price comes up into the zone and bounces literally out of the zone in a direction that's highly probable. And so that the probability of that is good. Okay? So we call that our money bounce. Okay, here's an example of that. When a new zone is formed, it's color-coded aqua. Once price comes up into the aqua zone and touches it and retraces back out based upon the strength setting, that zone will turn blue. And so when price gets into that region, we identify that as a blue color, and we call it a money bounce. Okay, so you wait for price to come into that zone. You place your trade when it gets at or near that zone, or on a confirmation that price is going in the direction you expect it to go, and then trade off it that way. There'll be a lot more examples as we continue on. I'm just trying to identify the basics here so you can see that the colors of the zones are important and that they have meaning behind them, and we want to identify price interaction with these zones as tradable opportunities. Okay? There's a lot going on in this chart, but what we want to be able to show you is the basic price patterns and how they interact with charts. The ability of a chart to go from an aqua zone to a blue zone off of the first bounce, the typical bounce count when it comes back up. And we're going to identify and show you that when a price pierces or goes through a specific zone, then we can identify that as a dead zone, and that zone will now go away. And as price goes back up and starts establishing new areas and new zones, then we can show that to you. So later on in a chart, we've reproduced the exact same chart, but we're now showing you that as that price breaks up and breaks through the previous zone that was there, that zone does go away, but then it continues on to form brand new zones, and the previous zones are still there and continue on. Okay? So you can see how the interaction goes between the zone that was there and then the zones now that are not. Okay. Also, here's a little introduction into some software that we are currently in development with right now, and we refer to it as APA Right Side, where we are showing you that we recognize specific price patterns, and we identify them with XYZ ABC type structure. And then we are able to, through Fibonacci retracement value levels and known support and resistance zones, where we can project into the very near future where price is expected to go based upon that. And so that projection, of course, will be based upon the time frame of your chart. This being a weekly chart, we are projecting into the future by months and not by days. If you have a minute chart, then obviously you'll be projecting into the future by minutes. Okay? Here's a link, and I will copy this and give it to you guys in the chat pane there. There's a link to freestockcharts.com. Our software is not compatible and does not run under freestockcharts.com, but we do overlay on them and make it available to you to let you know that it's important to know the big picture. To know the larger time frame charts give us the overall big picture of where we believe that price is going. And then we're showing you where the zones are and how we believe price is going to be reacting to those zones. So we've given you a nice big picture view of that, so it's something you can go to and visit at your leisure. Okay? So the idea behind the zones is that we've identified that there are bounce counts and that the bounce count colors have meaning. A new zone, aqua, first bounce off of a zone is blue, and we say that's the money bounce. We should have color-coded that green, huh? But anyway, it's blue. The second bounce is orange, the third is purple, and the fourth, or higher, is the saddle brown. Any dead zone, that means the zone is pierced through there, is color-coded black. Okay, we have given you the ability to show active and dead zones. We've given you the ability to change sound alerts, but just by pulling down a menu item and selecting any sound alert file. So if price interacts with the zone or breaks through a zone, then we can alert you to the fact. Okay, so you can even have a drop-down menu for file selection And we've given you a nice little drop-down menu on the charts as well, so you can have most of the mostly used items toggle on or off your charts, toggle on or on your zones, put on your Fibonacci tools or not. And so we've given you that ability to pop those on and off your charts very quickly. We've also given you some advanced features, so let me pull up the indicator list here for you and show you that on the advanced features list that we can identify the zone type that we're trading, whether we're trading conservative, normal, liberal, or if it's intelligent, where it will be smart enough to select between those. And it all depends on the school of zone theory that you've come from, how you've been taught and how you apply your rules to these, whether you're from OTA or whatever school that you've gone to where you've understood the basics. Then you can apply these to the rule sets, and they'll be drawn accordingly. Okay. Also, if you purchase the tools, we don't leave you hanging. We give you a workspace and we give you templates to get you going, to get you started up, to get you charts that look nice and at the same time we know that work. And so that way you can learn how to start applying these and using them right from the start. Okay, so here's some examples. We want you to understand the concept of confluence, idea that multiple time frames give you a really big idea of what's going on in the market. Okay, so a lot of people use shorter time frames to time their trades and for trend following runs, because they can see the rally-based, rally-drop-based drops and structure overall price move. Medium road will give you a midterm picture of potential pullbacks or prices. The longer-term charts will almost always show you where the major support and resistance areas are and where the possible reversals occur. Okay, so but when you have all three of them, when you have a zone that lines up in all three of these time zones, we refer to that as confluence. That's where you get the biggest strength in a move. Okay, whenever you have confluence, then we say those zones are usually pretty strong and a high degree probability that price will either pause, stop, or reverse in those areas. Okay. So, for example, we've seen several times that price comes up to this level, and many breakout traders are going to be able to see this and think that as price goes up through this level, they're going to see that as a breakout. But having your zones in front of you and knowing there's a very high probability that price retraces during these regions and seeing the overlap, then you won't be fooled by the breakout. You're not going to be the one who's sitting there holding the high of the day as the price retraces very rapidly. You're going to be looking at selling these markets because you know that the probability is in your favor, that you're going to have a much lower risk entry and a much higher reward potential by taking this as a reversal trade rather than a breakout trade. Okay, here's some examples of how we apply the rules to a basic bounce count. The blue zone that you see here was an aqua zone prior to this. Price comes right back down into this, tests the zone. On the test, down into this aqua zone, as price comes down into the zone, then on confirmation that it exits the zone in the direction of our trade that we expect it to go, we enter our trade, and then we place our stop either just outside of the price bars we entered on or just outside the zone, whatever your risk tolerance allows. Okay, and then you take the trade either to the next zone of opposite type or to whatever your profit target is. Okay. Again, for all those who are coming in late, I just wanted to say that we do have a questions pane on the right-hand side of the GoToWebinar control panel. If you do have any questions at all, just pop your question in that pane. I'll see it, and I'll be able to respond to those. Okay, here's another example. We have a nice little aqua zone here. We can see that price comes right back down out of the zone once it's formed. It comes back up to retest the zone on the very first count, which refers to the money bounce. Then as price exits that zone in confirmation of the direction of the overall trend in the direction we expect the bounce to go, then we take our trade. You place your stop just outside of the entry bar or just outside of the zone that you're looking at to try to minimize your risk. And then you set your profit target either at the next hourly zone, at the next zone of opposite type or at a set profit target, whatever you see. So this way you can see that price will always go back into these zones. You can see over and over again that the zones are areas that price likes to visit, likes to pull. They're almost like magnets, pulls price into these regions. And so you don't leave money on the table by taking profits in these areas because you're expecting price to come there and you're expecting it to pause. And those are always the best places to take money off the table. So in review, we want to look for the larger time frames to give us the actual trend reversals. Okay, we couple that with the smaller time frames that show us the actual trend following trades, to time our entries and to get in and out. And then we look for confluence between multiple time frames to see the strength and existence of zones on multiple time frames to know that those are either strong zones or that there's much higher probability that price will retrace following those zones. Okay, now we're going to transition into other software tools within our package. Okay, there's a quick question here. Let me see that. Okay, let me go back to that. The question was, okay, I'll do that. This is the same chart. So this is the 5-minute time frame right here, 5 minutes. This is a 15-minute time frame. And this one right here is a 60-minute time frame. So we refer to that as the higher time frame, and this as the lower time frame. Lower time being the lower amount of minutes. 5, 15, and 60. Okay? It was the same thing here. 5, 15, and 60. All right. So moving on, another tool that we use is called the APAtrender. The APAtrender is a simple trend following rule. It is like a moving average with average true range and other sugar and spice built into it to give it an ability to follow the trend, to hold you into the longer trend, but fast enough to get you out and change direction if the trend changes. So as the idea is that if when it's green, only look at taking long trades. So you're not going to sit here and think about taking a short trade here if you're following the trend. So you're looking at these pullbacks as opportunities to add to your existing trade or to enter an existing trend. Price comes right back down into the zone. If the zone stays green, then you're looking for entry opportunities to go and stay with the trend. Whenever the trend turns red, then you're looking to short. You're looking for short entries. So when price comes back down and pulls back up to that trend or line, you're looking for a short opportunity, not for a long opportunity to profit from these moves, okay? We also have a tool that's called APAVolume. The volume is very, very important in the market. It's understanding that. And so what we've tried to do is put a tool to show you high volume events that occur in the markets. These high volume events are very key to understanding price action and movements. And so when these zones and these high actions, high probability volume events occur at the same time, then they're particularly powerful and profitable. Okay, we color code these bars for you blue. We also give the ability to show the width of the bar change based upon the actual volume. So you can see this is a very wide bar, and the one next to it is a very narrow bar. So it shows the amount of volume occurring in this bar, and it points it out to you, makes it much easier to see. Okay. Now, even though you do see other large bars, those bars aren't the volume required to signal these, and that volume is, of course, programmable. You can set that volume up as a threshold value within the software, and then we show these to you in real time, so we can know when breakout volume is coming into the market. We know when exhaustion volume is coming into the market just from the telltale signs. You got the wicking, you got the very narrow bar next to a very wide, high volume event. So the idea behind that is to know how volume interacts with price, when to get into the market, when to get out of the market based upon these volume actions. Okay? So coupled with the zones, it's a 1-2 punch in your favor. Here's another example showing some of our packages. We've also thrown in another short little program that's called the app background. Right now it just demonstrates and just shows the Apple logo on your screens, but you can change that to be any logo that you want, or any application that can display a silhouette image of that in the background of whatever you want displayed, American flag, or whatever you want back in there. Another tool that we've got is the app Candlesticks. The app Candlesticks shows you high probability wicking patterns, looking for inside or outside reversals. We're also looking for exhaustion or the overbought, oversold conditions that the wicks show. And so whenever these signals come inside of zones, then they also are particularly profitable signals. Okay. This is with all of these signals turned on. It can be a little messy over time, so sometimes we like to filter that down and only display just the inside, the key inside reversals. And a lot of times those line up with the charts quite nicely and become very profitable. Okay, and what puts it all together is the app strategy. The app strategy is a program that shows how to use the price action, the zones, and our APA-trender all into a single package. Okay, so this is an example of a downtrend where the trend line shows a downward trend. We're only looking to take down or short trades. In an upward moving market where the trender is moving up, then we're only looking to take long trades. Okay, and so you can see the areas where price interaction with the zones, we're giving you the ideal opportunities or ideal places to place your trades. And so we're just showing you through examples. The indicator shows that these are great places for great setup trades. They're not the very best place, but you know, obviously this would be the best place, but you don't always get that. And a lot of times price will come in really fast to these regions. So we're giving you practical applications of price action with the zone in order to trade these in the direction of the prevailing trend. Okay. The nice thing about it is that you can also structure it into your trading plan. Okay, your trading plan can be set up, and here's an example that we've done. It's a little bit small on this chart. It's a little bit bigger here. You can see that, where we've taken the first 5 ticks of the trade is our profit target, and then the next target is the next zone of opposite type. So that was written in a structure on how to trade the ES on the 4-range chart for a simple trading plan. So whenever this signal occurs, whenever the APA's strategy shows the conditions are met, then the trading plan enters the trade, takes first profit at 5 ticks, takes the second profit at the first zone of opposite type. Same thing occurs here. Okay, whenever the profit is too close to the zone, or whenever it is following a certain number, then you have the liberty to just completely ignore those and just don't take the trades if they're already too far along in the trend. Okay, if you're not already in trade or those signals come up. Okay, the ones that are usually most profitable are the first trades. The trades once the trend changes direction. Pull that down. What you should be seeing right now are 6 charts. Some of those are actually demonstrating and showing the APA zones with the APA strategy running in them, and some of them are showing some setups and trades right now. But is there any specific markets that you guys are interested in that you want me to show or demonstrate right now? Okay. So you can see the application can be longer term. So this is a weekly chart. We can see price action interacting. This is an aqua zone, which is a brand new zone. And then each zone color automatically changes based upon the interaction of price with that zone. So you can see this is an aqua zone. Price hasn't interacted with it since it was formed. Same here. Purple means that price has hit that zone at least 3 times. This one shows that it's hit at least twice. And this shows that it's hit it at least once since it was formed. Okay, so you can see why we refer to a money bounce as a very key concept. You see price coming up into a region. You can see why it tends to stop or pause or even reverse when it gets into an area of known supply or demand. Okay, it works in stocks, stock markets. If you pull up a stock symbol, then you can look at the exact same thing. ETFs, yes, gold, and those things all interact with each other. So some of these charts, these are range charts. If you have access to other time frames, then of course it does minutes and of course all the other ones. But if you go in and format the data series, then you can see that there are quite a few other bar types that can actually be displayed, and anything that can be displayed in NinjaTrader, the epizones will work for. And you can see that Renko is here, but if you have some modified Renko charts, then it works with those as well. But we don't know, there's a lot of modifications, so we'd have to test those just to validate, just to make sure that it actually does work for those. I wouldn't know how to say whether they're more accurate with Renko charts than Candlesticks, because you can change your bar type to anything that you want. But the actual candlestick chart just is something that a lot of people like to see. You can change it to anything that you prefer, though. Okay, if you're looking at some specific setups. One thing that we like to do is when price comes up into a zone, when it comes up into an area of previous price resistance, then that's what we like to do, is we like to take these trades. And so you can see at the start of the day this morning, right here about 9:30, price was coming up, and it came up into an hourly zone. It was also coming up into a zone, and this previously was a blue zone. When price was coming up into the zone, then we have confluence. So not only did we have a zone which we saw previous resistance at, but we also saw a zone within an hourly zone. So we have multiple time frame setup. Okay, so we were all at this point when price was coming in here, we were looking to short this market, not try to trade the breakouts. So a breakout of the morning or the Globex highs in this case usually triggers a lot of people to start going long. And you can see from this wicking pattern in price that when any time it did come up in here, then it usually came down pretty strong. So we were looking at taking and shorting or selling these markets coming into this. So our trades took us, and we were able to take it all to our first profit targets, and then down into our potential second profit targets coming into this daily range. So this right here, this dotted line, I've set up as a daily zone that shows us our hourly zones along with our 4 range chart zones. And there was also in this same area a 5 and 15 minute zone as well. No, you will not get the exact same price zones. I can just pull it up for you right now and show you, then that way you can have a comparison. Okay, I'll pull up a new chart. Do you have a specific symbol, Ed, that you want me to pull up and show with a Renko versus Candlesticks? Now you said Renko, but then I guess you're referring to Renko and range, or you say Renko versus Candlesticks or range versus Candlesticks, but you can show Candlesticks on either. But what is exactly you want me to show, and I'll be glad to show it. Crude oil. Okay, I'll pull up crude in for you. Any specific time frame? Do you want me to start with range or Renko? What speed do you want me to set it to? Okay, well, I'll just pick one. Okay. All right, so I'm going to set up crude oil on a 4-range chart. Right, and I'm going to apply the up zones to that chart. All right, now it's going to have 3 days. I'll make it 5. So here we have our 4-range chart for the crude oil. I'll expand it a little bit more so it's a little bit easier to see. Okay, so you can see when price comes to these zones, those zones have been there for quite some time. Okay, so you can see when price does finally get down to those areas, then you can see what happens to those. In this case, it was a aqua zone, which gave us our traditional money bounce. And so they're not just hanging around for nothing. We have them there for a specific reason. And they show us the trades and how to take them. Okay, so the actual strength of the zone will determine how many price bars have to interact with that zone in order to define a touch or a bounce, or to define the zone itself. So the zone physically will not form until a certain number of price bars have passed to define that zone. So right now the zone strength of 5 means that 1, 2, 3, 4, 5 price bars have to complete outside of that zone in order to define that zone. And that after price comes back up and touches the zone, 5 price bars have to confirm that zone before it's going to change its color. That doesn't necessarily mean you can't trade it. That just means that whenever price comes back down into this region, it's not going to turn blue until the 5th bar after price comes back up. But you're already going to know price coming into an aqua zone is a bounce count, and you're going to be looking at trying to take advantage of that on your first close in the direction of that trade of that off that bar. Okay, so that's the idea behind that. So now let's change this to a Renko. Okay, I assume a 2. Okay. I'm not sure exactly how Renko bars correlate with range bars as far as equivalency in time, because they're all tick-based. But okay, so those are four Renko compared to a 4 range, and so the structure of the price action relative to those bars are going to be the defining element of the zone. So if we change that back to a 2, then you'll see bricks are going to get smaller, and the zones are going to change based upon the structure of the zones on the brick size. And so you can change those to be anything that you like. But if you do find 2 equivalent zones, and what I was talking about earlier about the time frames, multiple time frame confluence, if you have a 5-minute zone, or 15 or 30, if you have a 4 range, and that was what I was trying to show on that chart before, is I had a 4 range chart. Okay, and in this case, a 4-range chart. I have an hourly chart. Also have a 5-minute zone, all in the exact same area of an overnight high. That, to me, shows very high degrees of correlation confluence, because you've got overlapping time frames giving you the exact same information in the exact same zone. So if a 5, 15, 60-minute, 4-range, 6-range, I use that loosely, occur in the exact same spot, then I'm much more likely to take this as a reversal trade than I'm not. Does that make sense? So did I show what you were trying to find on this particular chart? See, here's the hourly chart. See the hourly chart overlaid with a Renko chart. And you can do that with 15 or 5-minute charts as well, but they're fairly fast. And the zone strength setting, of course, so there's a lot of zones that occur in here, so if you wanted to set this higher, you could. And that's going to mean it's going to be much stronger zones. You're going to need 7 zones, in this case possibly even 10. There you go, that's looking a lot cleaner. A lot more meaningful. You can see the concentration of the bars in the areas that are most likely to give you support or resistance bands. And you can set them any higher also. So if you format the indicator, you can see that the actual zone itself, you can set this to be any number. So if you wanted it to be 15, you could. Okay. All right. Here's a 30-minute candlestick. You can see the bars around it. Those are 60-minute bars that we've drawn to show how closely they're aligned. And you can see right in here, you do have a 30-minute and a 60-minute bar. That's all in the exact same location. Here you can see the 30-minute overlap with the 60-minute, and how important it is to see that multiple time frame. Okay. Does that answer that question, Ed? Let's see. Yeah. If you get too many bars, then yeah, it can be very confusing. It'll get too cluttered, and it's a lot harder to trade that and to see it. But the idea behind this is that you want to increase your strength to the point to where it's meaningful, but at the same time, you don't want to lose information by restricting the zones. Okay. The zones, we don't want a bunch of zones cluttering the field, but you want enough strength in the zones to validate that price has come and gone through that area, and you get a good interaction. So the rule of thumb that we use is that the higher the time frame, i.e. 60 minutes, 240 minutes daily, then the lower the strength setting, and that the faster the time frame, i.e. 15 minutes, 5 minutes, 1 minute, 100 tick, whatever relative speed you use based upon the instrument that you're trading, because a 100 tick on an EMD is relatively normal, but 100 tick on ES will be ridiculously fast. So depending upon the instrument, the faster the time frame, then the higher the strength setting needs to be. And that's because so many bars will pass in a very short period of time. You want to make sure that your zones are going to be tuned up to that speed. And we've given you the ability to do that. So the software is not going to be limited. It's not going to limit you as a trader in developing a trading plan that meets your specific trading style or your risk tolerance. So that's the real advantage that we wanted to be able to show you. And we've given you a lot of tools to be able to do that. We've given you the APA volume. Sorry about that. I forgot to mute my phone. We've given you the APA volume to show you the high volume events. We've given you Candlesticks to show you the turning points. We've got a lot of other software tools that are in development, but the APA zones, and we've given you the trender, trend following trades, and we've given you the strategy. So those are all things that we've made available in your arsenal as a trader to apply to the markets to help you to become a better trader and to use those to develop a trading plan so you can be consistent. I don't know of many people in the markets that are trading without trading plans that are consistently profitable. So it's very, it's highly recommended. All right, are there other questions? Anything else you would like me to show you? My time is your time. All right, let me pull that up then. Inside of our chat room, we've got a lot of guys out there that are doing a lot of stuff and doing a lot of trades. They chit-chat. When you join us, we throw you into our Skype chat room. It's a community where everybody's in there just chatting away and sharing their trades, and they're even posting links to what they're doing and what they've done wrong, what they're doing right, what they're really looking for. So the idea is to share and be interactive, and we've got quite a few guys that are in there sharing and doing their daily stuff. We also have, in a forum very much like this, a training room where we show more advanced topics, training specific to the APA zones. We're going to be bringing in guest lecturers to talk about the advantages of tape reading. We're going to be looking at bringing other people in to teach areas that they're strong in to our guys. Psychology of trading, the advanced use of price action in the markets, how to trade breakout trades, and things like that. And so we're going to be more and more in the future introducing all of those into this type of training. So we give you live interactive trading in addition to the training we provide through our videos on our website and in our user's guides with the software that you purchase. So are there any questions with regards to that, or how to get started, or what to do and what you get out of it, or anything else for that matter? I don't want you to walk away with questions. Okay, well, if there aren't other questions, this is our contact information. Please visit our website. You have signed up for the webinar already, so if you want to see this presentation again, we will be holding it Friday morning at 9 o'clock, so go back to the website, sign up for Friday's webinar. If you want to go back over this, and then following the webinar, we're going to be opening it up to live action in the markets just following the presentation, and then you'll be able to see the zones and how they interact with live price action, and we'll be inviting everybody else into the room also for some more advanced training on the subject of all things APA zones. Okay, APA is a symbol. It's an acronym that stands for Advanced Price Action. So we're looking for advanced price action zones, how price interacts with supply and demand and support and resistance. Okay. Yeah, the blue bar that you see there, that's the APA volume, firing off a high volume event at the end of a trading day. That usually occurs right when the market closes for that particular instrument. A lot of sell-off volume usually comes in. You can see that's always a key trigger before price changes. Are there other questions?